Hello fellow traders. In this video we'll break down how to spot market trends using volume and indicators in action. Whether you're a new trader or experienced, mastering these tools can give you the best real edge in the markets. Let's dive in and improve your trading precision. Today we're going to get into spotting market trends, volume and indicators in action by a pajama trader. Let's get into it. The importance of spotting market trends. Understanding trends helps traders identify opportunities. Volume and indicators confirm trends for better entry and exit points. Spotting market trends is essential for traders because trends reveal opportunities. Volume and technical indicators can confirm whether the trend is real or likely to fail. Combining these tools increases your odds of a successful trade. Volume as a market signal. Rising volume confirms strength in trends. Volume spikes signal potential breakouts or reversals. Volume is the lifeblood of any market trend. When markets rise on increasing volume, it signals strong participation and confirms the trend. Conversely, volume spikes at the resistance could warn of reversals. Indicators to confirm trends. Directional Movement Index, DMI, identifies trend strength and direction. Displaced Moving Average, DMA, projects price trends forward for better confirmation. Combine volume with DMI and DMA for stronger signals. Indicators like the Directional Movement Index, DMI, and the Displaced Moving Average, DMA, are powerful tools for confirming trends. The DMI measures both trend strength and direction, while the DMA shifts the moving average forward to better align the projected price movement. Together with volume, these tools can help traders spot trends earlier and more accurately. Breakout example, SPY, S&P 500 ETF. The SPY example shows a breakout above resistance with volume rising. Notice how the DMI and DMA moves, confirming a bullish trend. The MFI also spiked above 80, indicating strong momentum and buying pressure. SPY breakout. Price closes above resistance. The volume spikes, confirming strong buying interest. The MFI above 80 signals strong momentum. Why combining tools matters. Volume validates price action. Indicators confirm strength or weakness. Using multiple signals improves trading odds. Relying on price action alone can lead to false signals. When you combine volume and indicators like DMI, DMA, and MFI, you gain confidence in identifying strong trends. Multiple tools together reduces guesswork. Recap, key takeaways. Volume confirms trend, strength, and breakouts. Indicators like DMI, DMA, and MFI enhance trend analysis. Combining tools improves trading precision. To recap, volume is the key trend validator, while tools like moving averages and MFI, DMI, DMA provide clarity on momentum. Combining these tools helps you to make better trading decisions. Thank you. If you found value in this video, don't forget to give it a like. Share it with other like-minded traders looking to improve their odds in trading. And consider subscribing to the channel for more market edge videos and alerts to stay ahead of the market trends. Thanks again for watching.